at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the
Good enough.
minds, margins, and leverage.
All right, welcome back to Noobs. It is December 12th. It is Friday. We did not do an episode on Wednesday because we had real life stuff that we couldn't get away from. So we're basically hitting the Monday and hitting the Friday. Your account was up higher on Monday. Yesterday, it was getting really clobbered. We took Oracle through the earnings, and Oracle got wrecked through earnings. So you'll notice Oracle down pretty good today. Yesterday, you were down like $2,000 at one point, and then you made pretty much most of it back by the end of the day. Today, you were down like 2,300 at one point today. You made about half or more of it back again. Oracle's still not working, probably your biggest loser on the day, followed by Angel Studios. And then you've got NVIDIA down, MP down. So nothing's really working today. The market is kind of recovering a little bit here. It was down 100 earlier, so we're almost 40 points off of the lows. We still got the NASDAQ, weakest of the group, down 400, the Russell down 25. All in all, not particularly that worried. VIX index did get up to 17 and a half or so today, but that has come back off again. And things are looking to calm down a little bit. So not a lot we're going to have to do today, I don't think. The only thing that's really you're going to have to make sure is that you notice your available capital is negative. See how you're negative $400? Can't have that. Got to fix that. So what I would probably do is go to MU. That one's actually working on the day. It's getting a little bit of a rally. You see how your 200 put there is marking at 470 in January. Let's see if we can take that out to February and get around 470 in February. That I think will get us far enough and away from the money that'll free up enough capital. So buy that back. And then go to the February. We need around 470. That'll put us down at the 180. So that's $2,000 in risk that we're taking off of there. And we're going to collect a little bit of a credit for doing this, about 40 cents. Go ahead, put that through. There, you're filled. Did not help your capital whatsoever. I wonder why. Took $20 away from the money. Didn't help your capital. Well, okay. Google, you can take Google off here. That one's actually winning again today. It was down more, but you might as well clip that, and that'll free up about $300 in capital. Buy that back. I think it's probably marking around $2. 214. Should have closed out earlier when it was down lower. Oh well. Go ahead. Yep. You might have to take that a little higher because the market is rallying. Oh, never mind. Okay, so that freed up $300 in capital. What else can we do to free up some capital? You could adjust the Russell. You could adjust. Here's what you do. Go to your MES. Close your MES. What is that marking at? Your /MES, second from the bottom. Buy that back for $30.25. 31.25, I mean. Oh. There you go. Buy that. There you go. Now go back into MES. Details, options. Nope. Go to the MES on your watch list on the right-hand side. You're in the Z25 contract. We want the continuous contract. Here we go. Now go out to the 35-day expiration, which is going to be in line with the rest of your contracts, and sell this one for 30. Whoa, no. Go back down. Stop. See that one for 33 right there? The 65.50. Sell that puppy. Actually, sell the 6,600. See if you can get that on. Select 40. Yep. There you go. Did not sell. You might have to take it down a second. There you go. Try that. Over 40. Not getting filled. Come on. There. All right. So with that one, where did you go from? You went from, I think, the 6,800 down to the 6,600. Yeah. Open it back up. 68 down to the 66. Yeah, you added time, but that freed up enough capital that you're not going to get a maintenance call tonight. I say, what else we got going on here? I don't think there's a bunch of other things that you're going to want to adjust in here. I don't mind most of these positions. Oh, Oracle's getting a rally. Go back into Oracle. Holy crap. Wow, what's getting a rally? Wowzer. Very strong rally here. Dadgum. See, that call contract that we had sold is getting bid up. I'll take care of that by the end of the day. I'll figure out whether or not that needs to be rolled out or just bought back by the end of the day. Not going to lie, Oracle rallying, even though that one little call is now being tested, Oracle rallying, you've got so much more money that you're going to make in an Oracle rally that it's really not that big of a deal. Let's see. MU, you already adjusted. MicroStrategy, I put this position on for you here, MicroStrategy. So this is a butterfly, MSTR. I think it's just called strategy now. So this is a butterfly. It's kind of like it's a defined risk trade where you buy a call, you sell 2 calls, and then you buy another call. So like it's 2 vertical spreads combined sharing the middle strike. So like the short strike in the middle, that 270, it's a long call spread and a short call spread that are combined with a common middle strike. So this is going to make money if the stock is above 230 and under 310 in the next like 35 days. So if we get a rally in crypto, this is a bullish strategy. It's a relatively cheap strategy. It hasn't worked so far. But it's a relatively cheap way to get potentially a lot of exposure in a stock like this. Cause like, I think I paid around $3 for this. The most that it can be worth is $40. So if on expiration, the stock is right there in the middle, it'll have a value of around $40. But we'll talk more about that later on. Angel Studios Archer's coming back today. Webull not working today. What's your short call on Webull? Is that in January? Still worth 60 cents. Really hasn't done much. It's gone up, gone down. It's at the 10 strike. I say you just leave that. IBIT. Here's another one I put on for you that's not working. IBIT. This is called a calendar spread. So you notice that October of 2026, which is about 10 months from now, 11 months from now, I bought the right to buy this stock, which this stock is an ETF for Bitcoin, basically. So I thought to myself, you're a young person, all the young people like crypto, why aren't we trading any crypto? So I put this on here for you. So basically what I did is at the end of this month, I guaranteed somebody's right to buy the stock at 60 at the end of this month, December. And then I bought my own right to buy the stock at 60 all the way out in October. So when we get closer to the end of the month, what we'll do is we'll buy this call back for practically nothing. And then we'll go out to January and we'll just roll this every month until this gets a rally. And hopefully the appreciation of our long call over the course of the next 10 months will be, hopefully it'll stay at least worth $6 or $7 and we'll be able to continue to collect premium month to month against it for the next 10 months. What else did I do? Netflix is actually kind of coming back today. I think I put Netflix on last week. So we had Netflix on. What I did in Netflix, we got tested to the downside. We were down at like 92 or 93. So I actually rolled this out to February. So there's 70 days in that expiration, but it's down to the 90 strike, whereas we were at the 95 strike. So just kind of reduced risk a little bit in there. And I also did the same thing in NVIDIA. So I widened out your NVIDIA out to February. Now we're all the way down to the 150 put and the 200 call. And I also bought a few more shares of NVIDIA to get your average cost basis down. So now your average cost in there is actually under 200, and your call is above 200. That's where you want to be. So I don't think we touch anything in there. Oracle continuing the rally here. Really, we need Oracle. Look at how much this call is worth. It's $21. We need Oracle about $20 higher. Probably only $1 or $2, maybe $3 of that is extrinsic value. The rest is all intrinsic value because it's so far in the money. You have to buy it at 210. It's currently trading at 193, so $17 below where you have to buy it. So $3.50 or $4 of that amount is extrinsic. The rest is intrinsic value. I don't have a problem buying Oracle at 210. I say we leave that, and then next month we'll just roll it out again if it's not above 210. PAL, you're actually getting the right move in PAL. So this one is working very nicely. You're overall up $1,700 in here. I think you just let this go through to March. PAL actually looks like it's on the precipice of breaking out significantly higher, but we've already adjusted in here as much as we probably can. So really, there's still about what? Open PAL back up. You're trading at $11. So we're $2 past our strike. So we're at 137 basically, which our short strike is 135. So we're $2 past that, which means how much do we have left to make in this? If it's marking at $11, we have to sell it at 135, but that option contract is still worth $11, and the stock is currently at 137. So how much do we have left that we can make out of this position? $900, yes. So there's still $900 that we can make out of here. If we get that full $900, that'll put you at about $2,600 total profit in that one position. And then we'll just let it get called away. Or maybe we'll even look at rolling it again if there's opportunity. Then the Russell, actually, you were getting clobbered on the Russell, but what I did here, so the Russell was getting tested really hard today. So what I did is while we were down like 40 points or 35 points or whatever, I actually bought back the calls and sold further away from the money calls, because even though we were going down, I still think that it's likely that we're going to head higher into the end of the year. So I wanted to get you more room to the upside, and it actually completely turned around. You were down like $400 or $500 in this, and now you're up on the day. So that adjustment turned out to be the right thing to do. So I think that's all. Like literally, you were down $2,300, and now you're down $600. Kind of went through the same thing yesterday. You were down around $2,000, and you were by the end of the day, you were down about $500. So like, it's not working perfectly, but the way that this market is headed, I think by the end of the month, you're going to be sitting pretty. So I'm not particularly worried. I think that's all I have for today. Do you have any questions about anything? No, we really didn't do much. We just kind of recapped all of the different positions and freed up some capital. But sometimes that's all there is to do. I mean, it's not like it's working in that you're making a bunch of money, but I do think our positions are still good positions. So I don't think I'd change anything. The only other adjustment that I made in MP is I rolled down your calls in MP. So now you were at the 70 and the 80. I think now you're at the 70 and the 70. So you're into a straddle. But all right. Well, thanks for watching, everybody. Don't forget to like and subscribe. Share the video with anybody that's interested in learning about the market. Come hang out with us in Discord. Check out some of the other content from our other content creators, Josh, puts out a lot of content, Nobel Trading. So check him out and come in here and hang out with us. We do a podcast with our members where we let the members come in, and we have kind of like an open forum podcast that goes on. If you want to partake in that, come in and join us. Check us out. It's Nobel Trading. And thanks for watching. We'll see you on Monday.
Another day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds, margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks, Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on the financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of follow no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. Explaining specs, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this market, play is like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity try choking on the sand. Profits and losses, they'd rather go play bands. You see the candles rise and fall. Risk and reward, it's a game of follow no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. Candles rise and fall. Risk and reward, it's a game of follow no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. In the stock grind.